Hello, I'm Marisa Christian for World Risk and Insurance News. In a recent edition of AM Best's First Monday, William Pargeans looked at the 2013 outlook for the U.S. life and annuity market. Here are the highlights.
The primary driver of the stable outlooks is the maintenance of strong risk-based capital ratios for the majority of the industry, and that is supported by continuing favorable operating performance. Companies have been doing quite well despite some of the headwinds that are facing them. The other dynamic that's going on are companies are looking at their enterprise risk management processes, tightening up operations, as well as exploring strategic options for so-called non-core businesses. To date, we see companies maintaining their asset portfolios. They haven't taken on much more risk, but we feel that's subject to change if the investment environment continues, because they will have to stretch for yield as time moves on. There are some short-term fixes. They can lower some of the product guarantees, which will alleviate short-term earnings pressure, but we don't believe that's sustainable. Having said that, the bond portfolios have held up quite well. In a low interest rate environment, you do get a lot of unrealized gains built in that portfolio, so that from a balance sheet perspective, companies are fairly stable at the moment. So our caution is, as things go into 2014 and beyond, if interest rates do not start to rise, we feel there's going to be an increase in negative outlooks.
We'd like to thank AM Best for their contribution. If you'd like to see more of William Pargeans' outlook for the U.S. life and annuity market or other contributions by AM Best, visit our on-demand library or the AM Best website.